Hey YouTube, this is Zach with Achilles Financial. We're back with another video, and today I want to talk about Microsoft. And the reason I want to do that is because we are at a very attractive buy point in my opinion, and I think that Microsoft is only going to continue to perform well. So I have been watching the stock. It has not really approached that $200 mark a lot. Today it kind of rose up above that. It bounced, and you can see that it's kind of hanging out at that level of support. I was looking at Google Finance, and one of the articles I saw from Investor Daily is that it was holding its 50-day moving average, and it bounced off that. And that's good because it shows that there is a level of support there. But this is a stock that had a huge run up, kind of in a hype type of basis, where it surpassed where it was prior to the pandemic in February. And you can see that movement here. And I played the stock then. A lot of you were witnessing that and saw that movement. And today what I want to do is then essentially compare that to, can we buy it for a long-term investment? And the short-term answer is yes. The reason that I really like Microsoft right now is largely driven by their growth in the cloud. So this is the biggest industry for them right now, is their Microsoft Azure, which is the cloud environment and where they have the most market share that they are capable of growing. They are competing directly with Amazon Web Services, and I think that Microsoft is in a really good spot associated with that. One thing that I really want to highlight, and we can start looking at some of the fundamentals, is I really want to highlight their balance sheet, because you can see that one thing that they've not had to do during the coronavirus epidemic or pandemic is take on a lot more debt. You can see that if anything, they're continuing to perform very well, both in terms of a cash basis as well as a total debt basis. However, what I want to highlight is this number right here. You can see that the Q2 number had cash of $13.5 million, or rather billion dollars. The reason that I highlight that is because this is cash on hand that they could utilize to finance an acquisition. There are a lot of companies that are on sale right now, and not all of them are in the software realm. But Microsoft recently announced the acquisition of Bethesda Studios, which they've already made a lot of games together with. If you'd like to see a video associated with that, I would highly recommend the channel Stock Ninja, because he does a very good job of kind of explaining the value add that that acquisition has. So go check that out. But it's an excellent acquisition for the company, and I think that there's a lot of value associated with it. One item that I would highlight is because they have the capability to continue making acquisitions, I expect them to continue to do so. The next thing that I would highlight is from a valuation perspective. A lot of companies are currently classified as overvalued under the coronavirus kind of surge in tech that we saw. But as you can see, in terms of the overall industry, the price to sales and price to book, Microsoft is really just slightly below that level. Whereas in the PEG ratio, which is really the one that you want to be looking at in comparison, they're actually very competitive in that world. And you can even see there that we see that therefore Microsoft seems inexpensive, even though they have a higher PE. But the value add they have is they have a lot more growth potential associated with their price to earnings. So that's one of the things that I really like about Microsoft, is that even from a fundamental analysis, they are doing very well, and they're not necessarily in a position where I would classify them as overvalued, where there are so many other companies that have really jumped the gun. I mean, this is still a massive company that is going to continue to perform very well. Lastly, one of the items that I've continually highlighted when we're talking about companies that I'm looking at right now, because I am not making as many speculative plays, is they do offer a dividend. Again, 1.12%, or essentially 1%, is not anything to get super excited about, but this is a company that's going to continue to pay you to invest in them. And that's something that when we're looking at these mega companies, I really look for, is even though they are growth oriented, as evidenced by their large cap growth, that they still have the capability to continue to perform well and to pay you some of that profit. So they are below, really 12.73% below their all-time high, which was achieved a few weeks ago. This is in line with the industry average. Again, they're kind of moving with the Amazons and Apples of the world. So there's a lot of advantages to have associated with purchasing Microsoft stock right now. I like the cloud growth opportunities. I like the digitization that is going on in the world right now. And again, they do offer a dividend, and you can see that that ex-dividend date is going to be coming up here in November, so you still have time to build a position. So that leads to the last point I'll make is I do like to purchase 100 shares of a stock. As you can see, if we look out at some of the longer term, which I don't necessarily make long-term purchases or long-term covered calls on tech stocks because they can have a huge run up. If we do look at the next week, you can see that for a 10% run up, or rather a 5% run up from where they're at today, 4%, you can see that there's still a $144 bid price. And essentially you can sell this, get paid $144 to sell that spread. So you can go a little bit farther out, but I don't think that's a bad bet. It's something that you can check out. So we'll see. A lot of value here, a lot of potential, but one that I'm definitely going to continue watching. If you found this video helpful, please leave a like and subscribe.